Morning, I'm Shagan Lawson, here to present Thor Explorations. Really happy to be here to talk about our projects. Thor Explorations is a West African-focused gold explorer developer. We've got 3 projects in West Africa, which are in different countries and diversified by stage of development. We initially started off with a project in Senegal. We added to our portfolio by getting a project in Burkina Faso, and in August 2016, we carried out what was a really transformational acquisition, was the most advanced gold project in Nigeria, which completely moved us up the value stage from being an early stage explorer to a developer and near-term producer. So we've got high quality projects with an existing resource and reserve, with resource upside. We've got a direct line of sight to near-term cash flow, and we're in Nigeria where we are building the first large-scale gold mine there. We've got first mover advantage there, which we intend to capitalize on. So these are the projects I've just spoken about. In Nigeria, our Segilola project, since we acquired it in August 16, we've managed to get a reserve, 448,000 ounces, grading at 4.2 grams per ton. We have a global resource of 862,000 ounces. And we slapped on an inferred resource as well of 305,000 ounces at 4.7 grams per ton. In Senegal, we have a project which is advanced exploration. We've got a discovery there. Our next milestone is maiden resource. And we're obviously capitalizing on our first mover advantage in Nigeria. We've pegged some more land on some very interesting looking targets. And our final project in Burkina Faso is in the Houndé Greenstone Belt, which hosts the excellent projects such as Roxgold's Yaramoko, Samafo's Mana Mine. We've JV'd that with Acacia, who are doing an earn-in. They've currently earned 51%, and they've got to get to PFS to earn up to 80%. We're listed on the TSXV. We've got a market cap of about 65 million Canadian, 51 million US. We've got significant Nigerian shareholding, a Nigerian institution on board. ARM Investments is our largest shareholder with about 20%. The rest is board and management, and a number of family offices as well from the UK and Nigeria. One thing we're obviously trying to do now, we're looking to build a mine starting this year and trying to get some more institutions on board. I'll just talk through some of the highlights that we've done since we acquired the project in August 2016. We've renewed the mining license, so this project is shovel ready for 25 years. We completed a drill program which showed this project is by no means, the resource is by no means closed out at depth, and you'll see in more detail along strike and within the license as well. We've carried out a drill program in Senegal, which has showed that project, which was almost our forgotten baby. Every single hole we put in was mineralized. There's an excellent second project for the company there, and we obviously picked up some new licenses. We're now currently doing DFS on our project in Nigeria. So our objectives for this year, we want to complete our DFS. We filed our preliminary feasibility study last year, which had excellent economics. We're now building on that. We want to expand our resource. Since we started drilling, this is looking more and more, not just, it's a super high grade open pit. In fact, it's the highest grade open pit development project in all of West Africa, where it's looking like an open pit and underground project now. So we're looking to extend the mine life up to 14 years. We're trying to get to that first milestone in Senegal, which is maiden resource, and we'll kick off some early stage exploration on our other licenses. So this Segilola project is our flagship project, the project in Nigeria. We own it 100%. There's no government carry on it. We have a global resource of 862,000 ounces, as I said. We have an all-in sustaining cash cost, which is $682 per ounce compared to the global average. The project capex is $71.5 million about, which is not an insurmountable amount of money for a project our size. And not only do we think we have a robust project, we think we can enhance that even more. This is a bubble chart of all the West African gold projects that have been built in the last 3 to 5 years. This dotted line across the middle is the average all-in sustaining cash cost. You see we fall well below that. The further to the right you are, the higher the grade. We're the highest grade open pit project in West Africa. And the size of the bubble is the IRR. You can see compared to a number of the projects that have been built, this is an extremely robust project. In terms of mining, it's 3.5 million tons of ore. The processing plant is 500,000 tons per annum, producing about 81,000 ounces per year for the first 3 years and dropping down to 47,000 ounces from years 4 to 7. And the infrastructure is excellent. It's a 3-hour drive from Lagos with a tarred road intersecting the project itself. The project cost, as I said, is $71.5 million. Most of it is from a direct plant cost. We're actually in parallel speaking to an EPC contractor, so these numbers are actually based on a proposal we've received and an MOU we've signed for a 10-key lump sum EPC contract. Here's a snapshot of the project economics from our PFS. At $1,250 gold, the project has an NPV of 140 million, an IRR of 53%, and a payback in less than 2 years. So closer to today's gold price, it's even more enhanced. You can see there isn't a huge amount of difference between pre-tax and after-tax. And that's because the Nigerian government is really trying to diversify away from oil and incentivize the mining sector. So there's no tax to pay for the first 5 years, after which you can recover your costs, in our case, $71.5 million. Since we built on these really fantastic PFS numbers, we've actually kicked off a drilling campaign this year. There was a lot of inferred material within the pit, which we didn't use in any of our economic analysis. You can see by some of our results we announced a couple of weeks ago, we're actually lifting this already high-grade resource. We think the grade of the resource is going to probably crack 5 grams per ton. We got our 2 highest hits over 100 grams per ton within the pit already. We've got some fantastic intersections, 5.5 meters at 30 grams per ton, 10 meters at 10. Look at things like the geotech as well, steepening the walls of the pit. We went extremely conservative for our PFS. Steepening that means we're mining less waste material. In addition to that, we've got our first results back from our metallurgy. It's been excellent. We think we can recover about 78% from gravity alone. So our CapEx number is probably going to come down. Our OpEx number is going to come down as well. And there's a 98.9% recovery. We use 96% recovery in our PFS. This really is a unique ore body. The bottom of the PFS pit is what you see in black. Our biggest hits have been underneath the pit, consistently grading about 3.5 meters wide. Intervals about 3.5 meters wide, about 25, 26 grams per ton. This is clearly an open pit to underground project, and we're excited about seeing what's going on underneath here. You look at a lot of the Archean and Birimian orogenic West African resources that get even higher grade at depth. We've only drilled to 200 meters, and we come up right up all the way up to the surface. Every time I look at the long section, I just think if this project wasn't in Nigeria, which isn't known for mining, it wouldn't exist. This would be a big hole in the ground, and that's the opportunity we have here. On the right-hand side, the red box is our mining license. The blue box is our exploration license. Everything I've spoken about today is that dark red line. The structure runs another 4 kilometers. Our soil samples show anomalies on the structure for another 4 kilometers. There isn't even an RC rig in Nigeria. There's one coming in June. We're excited about drilling these anomalies and finding a second one of these. I very much doubt this is a single occurrence in this whole license. Further to that, on a more regional scale, this is a 400-kilometer schist belt. We've gone and pegged out some very similar looking anomalies on this. We've got another 337 square kilometers of land. I've heard the first bell, so I'll just quickly touch on our second project, which is our project in Senegal. It's 5 kilometers away from Rangol's Massawa, the largest undeveloped resource in Senegal, which is what attracted us to us. We drilled this last year. Every hole we put in was mineralized. Best one, 11 meters wide at 8.1 grams per ton. We're currently carrying out an 8,000 meter drilling program there as well, and hoping to get that to maiden resource. You can get a lot more detail on this. We're in booth A2. I'd love to answer any questions. And yeah, look forward to speaking a bit more. Unfortunately, well, I think I've got a few seconds. I can just talk about, I could talk about our Burkina project if you want to know a bit more. But Acacia, the operator on that project, they're funding that. They're drilling 7,500 meters this year. They've earned 51% of that project. To get to 80%, they've got to deliver a PFS whereby we contribute or dilute. So that's Thor in a snapshot. Thank you very much.